right, stay with me. Uneducated Economist here. Thank you for joining in on today's live stream where we will be talking about the dissension that has taken place at the Federal Reserve. Ultimately, two people voted at the policymakers of the monetary policy, the FOMC, that's who I'm talking about here, the Federal Open Market Committee. There are 12 voting members with 5 alternates and 2 advisors. These are the people who make up monetary policy, and 2 of these people had voted against the rest of the group. So ultimately, the FOMC voted on monetary policy, and the majority of them said that policy should stay still right where it's at. 2 of them said that there should be an interest rate cut, a quarter-point cut, and 1 person didn't vote at all. So now this is something that hasn't really happened at the Federal Reserve for quite some time. And what I found interesting about this is that this is the second time that Michelle Bowman has disagreed with the majority of the policymakers. Now, what I found pretty interesting about Michelle Bowman's first dissension, which was the first one that had occurred in quite some time with the Federal Reserve, is that when she voted against the rest of the policymakers, against the rest of the FOMC, it was when the Federal Reserve lowered interest rates by a 0.5 percentage point. Right? When they cut a 0.5 percentage point, it was Michelle Bowman who was saying, nah, the Fed should only cut by a quarter point. So as the rest of the Federal Reserve policymakers looked to an aggressive rate cut, it was Michelle Bowman who had backed off and say, no, we need to be a little bit more conservative on this rate cut and only do a quarter point. That was, however long ago, almost a year ago now, when that took place. This time, she was saying that there actually needed to be a cut when most of the policymakers were saying, no, there shouldn't be one, we should stand still. So quite the opposite feeling coming from Michelle Bowman as when she first dissented against the rest of the policymakers. Now, I know for a lot of people out there, this is really confusing on what has taken place, but to understand that Jerome Powell is not in charge of interest rates. That is the key to understanding this. When you hear somebody say, is Jerome Powell going to, right, and then whatever comes after that, there's nothing that Jerome Powell is going to do. There's nothing he can do. He is the spokesperson for the FOMC. The Federal Open Market Committee, 12 voting members on monetary policy, those are the people who come up, formulate, vote on, and essentially deploy monetary policy. It's not Jerome Powell. So even the idea of replacing Jerome Powell, removing Jerome Powell, or even just including Jerome Powell in isolation as far as what's going on with monetary policy is very close-minded to what has taken place within the broader monetary policy coming from the FOMC. Jerome Powell is just a spokesperson on this. Now, to truly understand what it is that the Federal Reserve is attempting to do with monetary policy is to understand the dual mandate. The dual mandate is low unemployment, or full employment, however you want to describe that. That's, can be left up to debate. And then low inflation with stable prices. And again, this is not really described in a way that is like technical. Like, you can't say like, here you go, this is exactly what it is that they are looking for. Because ultimately the Federal Reserve had changed the way that they are not only viewing inflation and the inflation numbers, but then also how it is that they are conducting themselves in relation to inflation. Like most people have this idea that the Federal Reserve is trying to get to a 2% target, which if you had understood the Federal Reserve over the previous decade, then that would make a lot of sense. But ultimately, the Federal Reserve is not going for a 2% target. They are going for flexible average inflation targeting, which means that monetary policy will likely aim to achieve inflation that is moderately above 2% for some time, following periods when inflation has been running persistently under the 2% target. So now understanding that they did try to have inflation at 2%, the Federal Reserve would adjust interest rates in order to maintain a 2% target. So most people look at the Federal Reserve in this fashion. Like if the inflation is above 2%, they will try to restrict the economy to bring inflation back down to 2%. If it runs under 2%, again, the Federal Reserve would try and stimulate the economy to bring the inflation back up to that 2% target while maintaining an attempt to keep at 2%. Here's the problem. The Federal Reserve has never, ever, ever once achieved that. Never. Never once have they been able to maintain a 2% inflation target, not in the history of time. So to have a belief that they are going to do that into the future is very naive. That's not what they do. They can't. Like, they already tried doing that for years, 10 years plus. They were trying to go for a 2% target and maintain a 2% target and failed miserably at it. They couldn't do it. So now understanding that not achieving that 2% target, even after massive quantitative easing, right? Quantitative easing, 1, 2, 3, and 4 failed to produce the inflationary scenario that the Federal Reserve was looking for. This was a major problem for the Federal Reserve. And now the major problem that they were facing wasn't just because they were at a low neutral interest or low interest rate with the Fed funds rate. It was because of the neutral interest rate was very low too. Meaning that if the Federal Reserve was to lower the Fed funds rate to 0, they would not be far enough below neutral to stimulate the economy. Understanding that is the key to understanding why it is that they are conducting themselves the way they are today. Nobody, literally nobody, talks about the neutral interest rate. I don't understand why. It was such a big deal for the Federal Reserve just a few years ago, but yet hear not a whisper of it coming from anybody. So when the Federal Reserve said we were above neutral, right, just a few months ago, when they say we were above neutral and we're trying to get to neutral, what does that sound like? We were. That means in the past. There was a time when we were above neutral. This is what Jerome Powell is saying right now. Just listen to his words. We want to be at neutral, but we're going to maintain Fed funds rate. Does it not sound like neutral is getting closer to the Fed funds rate? See, neutral interest rate will rise. It's not something they can control. They can't say, hey, let's do stuff to the economy to make the neutral interest rate rise. There's nothing they can do to make that happen. The neutral interest rate rises on your inflation expectation. Whether or not you believe that inflation is going to be running persistent into the future, that is what drives the neutral interest rate higher. You will not only demand a higher return on your capital investments, but you will expect to pay a higher price for the goods and services out there. All that expectation of higher pay or of higher prices pulls the neutral interest rate higher. This is one of the reasons why the Federal Reserve is maintaining rates where they are. Once you recognize it, once you see it, it starts to make a whole lot more sense. All these other people out there are going, well, Jerome Powell's going to bow down to Trump, have no clue about how the monetary policy works. Donald Trump doesn't have anything to do with it, and really neither does Powell. Right? There's 11 other voting members on the monetary policy. Those are the people who are in charge of it, not just Jerome Powell. Jerome Powell's in charge of his one vote. And then he speaks on behalf of the FOMC. So when the FOMC wants to deliver information to the public, to the mainstream media, it's delivered through the words of Jerome Powell. But that's it. That's his power. That's the extent of it. Firing Jerome Powell will literally remove the messenger. That's the only difference inside of this. And now when you start to recognize how it is that the dissension within the Federal Reserve is actually providing for better monetary policy, this is really where the people start to get very confused, because they think the Federal Reserve is falling apart. This dissension within the voting members of the FOMC seems like they disagree, like they don't know what they're doing. They don't know how to handle monetary policy, and this is how a lot of people are internalizing the information, because they don't recognize that when you have many Fed officials coming out and disagreeing with each other, it actually creates a better monetary policy. Creating fear, uncertainty, and doubt is the name of the game. Because with fear, uncertainty, and doubt, and the open-ended belief of what has taken place in the monetary policy gives them the power of their words. If you have no clue, if they do not make it official, if they do not declare exactly what it is that they're doing with their monetary policy, but put it into a wait-and-see, data-dependent, they are leaving the monetary policy open-ended. And with that, you have no ability to be confident in what it is that the Federal Reserve is going to do. Then What ends up happening is over the course of the next few weeks and months, you are going to hang on every word the Fed says with some idea of what it is, or an attempt to figure out what it is that they are planning to do with monetary policy. This is how they do it. They are literally using the mainstream media against you. It's a gaslighting at its finest. Alrighty, you guys having fun here? Let me turn off the Wi-Fi. Maybe that'll help here a little bit. That help out a little bit. I see we only have 85 people watching, so I'm assuming it must be a bad connection. Powell's statements can also manipulate the stock market too. Again, whatever his statements are directly from the FOMC. He does not speak on his own behalf. Right? When Jerome Powell is speaking, he's speaking on behalf of the FOMC. If you change Jerome Powell, you would not change the message. Right? And I agree, his statements have a profound impact on the market. And this is something that they know. Like, I don't have my computer right in front of me, so I can't bring him up. But ultimately, if you were to go and look at Philip Jefferson's speech, right? Philip Jefferson is a voting member of the FOMC. He has given some speeches talking about how it is that they conduct monetary policy and never really once ever mentions interest rate adjustments. He even said it. All right, let me see if I can remember the quote. The markets, the specific words and sentences that the Federal Reserve uses are quickly incorporated into asset prices, right? The specific words and sentences that they use are quickly absorbed into asset prices. The Federal Reserve has said this. They know what words and sentences, the specific ones, to raise and lower the asset prices. The same thing for increasing or decreasing the financial conditions the resistance or the stimulating effects of the financial markets. They can do this with their words. They know it, right? I mean, if they didn't, how do I put this? If they weren't doing it, then Philip Jefferson wouldn't be talking about it, right? Like, I mean, we can say, oh no, man, they're just making that part up. Nobody discussed this, right? And when I find it and I share this information with people, they have a tendency to disagree with me and say, oh, they're just lying. And I'm thinking, well, nobody mentions this stuff that Philip Jefferson is talking about. And so if they're lying about it, who are they lying to? Me? I mean, nobody else seems to be sharing this information coming from these Fed speeches. So when I recognize and see how Philip Jefferson is saying they are using specific words and sentences to alter the asset prices and creating an increase or decrease to the financial conditions, like, to me, once you say it, then that's it, man. I know you're doing it. You know, it's not like, oh, this is a possibility coming into the future. No, this is what you are doing, right? Agree, he is not the absolute, but the chair is who most common persons seek or hear. Well, of course they are, right? Because they're the voice for the FOMC. Who else is going to be talking? Nobody. Now, if you go and read the speeches coming from the Federal Reserve, coming from the FOMC, you can get a much better understanding of what it is that they are feeling and communicating amongst each other. And then when you go and you look, this is one I love. When you go and you look at the mainstream media, when it comes to Federal Reserve statements, like the individual members of the FOMC, like when Michelle Bowman comes out and gives an interview, or Chris Waller comes out and gives an interview. If you notice, many times within these statements that they are giving, they very much align with each other. Like, hey, go and deploy this particular statements, right? Like, this is what I'm seeing. Like, there was a few months ago, you could not find a Federal Reserve article that did not have the word uncertainty in it. Like, if they had a Federal Reserve statement, if it had a Federal Reserve quote, if it had a Federal Reserve being interviewed, if it had anything coming from the Federal Reserve and it was an article in the mainstream media, the word uncertainty was in it every time. If it wasn't in the title of the article, it was written somewhere within it. Right? They create the fear and uncertainty and doubt to use that manipulation tactic against you. right? All right. Oops. Okay, so glad I found this channel. Everyone else is blaming Powell. Yeah, well, oh man, what happened to my screen? Oh, Jesus, it's getting bigger and bigger. Oh my gosh, guys, I don't know what's going on with the screen. I can't get it to shrink down now. Look how big it's getting. Oh my gosh. Oh, well, that works. I mean, it's close enough. Anyway, yeah, everybody blames Powell, right? Everybody is blaming Powell because there's really nobody else that they know at the FOMC. Like, if you knew who Michelle Bowman was, then you would be going through all her speeches, going through all the statements that she had talked about in order to understand what it is that's being talked about in the conversations that are happening at the FOMC. But the only person that you're listening to is Jerome Powell, because that's the only person who is really being like showing on the mainstream media. Then that's the only information you're going to get. Like that's it. That's the only place. That's the only person. So I can understand why most people are blaming Jerome Powell, is because unless you are actually doing the research yourself, as opposed to listening to other people out there, most people just regurgitate information that they got from somebody else, right? I mean, that's where like most of the information is. They will listen to the news, form an opinion, regurgitate that information again. But very rarely do you find a lot of people who go deep diving into the research themselves, to find the monetary policy, to understand it for themselves, not in a way that has been taught to them through a college course or something that they had picked up from another economist out there who essentially was taught what monetary policy is. When I went to learn monetary policy, I literally had to figure it out step one, like what's the difference between fiscal policy and monetary policy? Right? Once I started figuring these things out and started doing the research myself, I started coming to the understanding that nobody really sees the monetary policy correctly. Like not the way the FOMC is talking about it. Everybody else has this, artistic fantasy on how it is that monetary policy is being conducted. And most of the time they end up blaming it on Jerome Powell, which is even further away from understanding how the monetary policy is conducted. So as most people just really are clueless about everything when it comes to the monetary policy, the Federal Reserve, Trump's involvement, Jerome Powell involvement, so many people have like this made up belief about how it's going down. It's not surprising why it is that so many people are confused about monetary policy, and why it is that so many people can't see it like I do, which is essentially coming directly from the Federal Reserve. Like I didn't learn monetary policy by watching the news or listening to other economists or anything else like that. I learned it from reading directly from the Federal Reserve the issues that they were facing at the end of 2018 with the low neutral interest rate world. Like once I realized, man, neutral interest rate being close to the lower bound of zero has essentially destroyed the Federal Reserve's monetary policy. Like they are out of the game with the low neutral interest rate. So they had to figure out a way to try and increase that neutral interest rate to bring that up to a higher level so that they could regain some of their ammunition, which is essentially interest rate adjustments. But developing the tools to conduct monetary policy without an interest rate adjustment became the most effective tools that they had. So now that's what they use. All right. Man, I can't believe how big this screen is. What's going on? I can't get it to close. Look at that. Oh, man. Now I've really screwed it up. Gee whiz. It just won't close. Huh. It just keeps getting bigger and bigger. It just zooms in and nothing else. It won't close. Wow, you can see those trees, right? Oh, almost. So close. Dang it. Oh, well. Let's just call it quits, guys, because my camera is not cooperating with me. And anyway, I think I got most of the information out that you needed to hear anyway. So I really appreciate you guys sticking around while I go through some technical difficulties with my camera here. in trying to get this information out. But I think it's really important to understand that the neutral interest rate is by far the most critical piece of this information that nobody is talking about. And once you understand the neutral interest rate, once you understand how it is that the Federal Reserve is conducting themselves in relation to the neutral interest rate, all the stuff starts to clear up and it starts to make a lot more sense, and how it is that they are using their words to then guide the markets, to try and guide them in the direction that in which that they are looking for them to go. I mean, you think about it right now, we have mortgage rates that are at like the lowest in 4 weeks, and yet the Federal Reserve hasn't moved. So as people are looking for better interest rates or lower mortgage rates on the Federal Reserve's move, you can think to yourself, man, those mortgage rates are not necessarily tied to the Fed funds rate. Now, there is a correlation over time, but the immediate adjustment of interest rates throughout the broader economy do not take place with the Fed funds rate adjustments. That takes 6 months to a year down the road. There's a lag period that happens within it. All right, I'm going to go. Uneducated Economist, you guys let me know.